Well, welcome, guys. That was a fun day today. Today is Wednesday, July 30th. This is homework and preparation for Thursday, July 31st, last day of the month of July here. So let's get started. We're kind of going over the viewpoints of a commodity trader by Roy Longstreet. Actually, we have not started in that book yet. I'm still doing a interview that was conducted here by Intermarket magazine. It's like a 19-page little interview here, just to kind of set a little backstory on who Roy is. So let's jump into that, and then we'll jump into the market analysis. Today was a buy day, and a buy day indeed it was. So it was after it broke down, and unfortunately, the real buying did not take place until right at the end of the close there, with the news releases of the earnings releases. So, all right, we're going to jump in here. IM is like I said, that's the abbreviation we're using for Intermarket Magazine. IM said, I've been told that you are a pioneer in fundamental and analysis. Roy Longstreet says, I don't know whether I'm a pioneer or not. Fortunately, that's where I started. Had I not started there, I doubt if I would have learned as much as I had. I'm not one who knows it all. I've learned some things which are valuable to a trader and have kept me going. First of all, there is a difference between possibilities and probabilities. Probabilities involve forecasting. My forecasting used to be grounded in fundamental analysis. I did not always know the fundamentals, but I attempted to know. I used to believe what all fundamental traders believe, that the markets are always responding to fundamentals. So if you know and understand the fundamentals before others, then you will succeed. But I no longer believe that. I believe that the markets are made by men and that there are four classes of men. IM says, so you're no longer a fundamental analyst? Well, I wouldn't say that. I would answer it this way, though. I believe that men make markets, and man does not change. Man may or may not interpret the importance of fundamentals the way that I do. I believe that there are different classes of men, and that in every market there are always these four classes of men to a greater or lesser degree. Of course, there are much more than four types of men in the markets, but for the sake of simplicity and analysis, I have reduced them to four. Each group can be at any one time dominant. The key is to know what the mix of men who are making the markets. It's a question of which class will win out and which class is dominant. The first class of men doesn't think. The second class does think, but must have a reason for taking action. They are going to succeed over the long haul. The third class is in there professionally, hedgers and commercials. The fourth class thinks that they think. They are highly emotional and never able to control their emotions. IM says, how does the first class differ from the fourth class? The difference is this. Many people cannot think, but only do what they are told. Usually, the first class makes up the majority of a market. Today, they don't. They need to have an exciting market. The second group is comprised of people who are intelligent and are able to think for themselves, the successful traders. The members of the fourth group try to think for themselves, but they are incapable of anything more than just emotional thinking. I have a side note. Don't be an emotional trader. IM says, so in 75 through 80 might be a period of time where the mental markets were dominated by those who don't think. The outside speculator who just wants to buy a bull market. The commercial might be someone who sold the metals, and the higher they got, the more the commercial sold. Longstreet said, there's a difference between those who speculate for money and those who trade not to make a lot of money, but to protect their inventory. The hedgers are the third class and think more long term. The ride up was caused by those who didn't think, but the wild excessive top to the gold and to virtually every market is caused by the fourth group, the emotional traders. IM says, in other words, you slept well in 1939 because you believed that this rally was a temporary thing due to your knowledge of how the markets acted when the first war was announced. You did not know if the rally against you would last for days or weeks, but you were protecting an inventory and did not react emotionally. Yes, said Longstreet. I would think the actions of the first and the fourth class are very similar. Yes, what you mean is those who are emotional actually are unable to think. They think that they think, but they respond to their emotions. IM says, how does the market act when it is dominated by those who think? It never is except for occasional and brief periods of time, and very brief periods of time. For example, if the major trend is down, but the market rallies back part way, those who think will be selling into the rally, and the rally will turn down due to the forces of the second class. Huh, that sounds like a 50% retracement or 61.8% retracement. Interesting. Uh, Thus, the second class takes advantage of the excess caused by the first and the fourth class when it contradicts the major trend. IM says, how does breaking the market down in these four classes allow you to approach the market and understand it? Pardon me. You one drink. Longstreet said, I'm not sure that I understand it. This is relatively new to me. It has only been in the last 2 or 3 years that I have begun to realize that men are making markets. So I'm not sure that I can answer the question intelligently. Bull markets breed emotionalism and therefore attract a fourth class as well as the first class. The third class is always in the market by necessity, and the second class is never very far, always looking to get in early on an attractive opportunity. So the first and the fourth of men change the markets in its later stages, bringing in extremes. I think there were fundamentals that caused the gold market to go up, but not as high as it did. At key turning points in the market, the fourth class dominates, such as when we saw $800 in gold. How do you train analysts? IM says. Very simply, I had a book for everything, a book for corn, a book for wheat. I assigned an analyst to one or a couple of books. They were instructed to look for pattern similarities, analog years, and try to establish a cause and effect relationship in fundamentals and price movement. As things would develop in a market, each individual would write down his ideas about what happened during the day in a specific commodity that he was in charge of. It thought that the information I thought that the information gathered would help me today. I ended up realizing that this approach only got a lot of junk. People who write about markets are simply doing that which is necessary to keep their jobs. Whenever there was a movement in the market, it was necessary for an analyst to feel that he knew why it occurred. Usually, what they said was worthless. IM says, the correct answer to the question, why did the market fall, is simply there was more sellers than buyers. Right, says Longstreet. Why there was more selling than buying can be known, but it is often not even important. I'm one of those that doesn't know all the reasons why there is more selling than buying. But the difference between myself and the next trader is that I know that I don't know. Most other people believe that they know. So you have no problem entering a market when you know that you don't know the reason behind its move. Pardon me. Longstreet says, I know I can know something. I know that the market moved. I know that the increased buying was caused by something. I may have an idea, but I don't know if it's the correct reason. But I can know that as long as my interest is truth and truth alone, and that I perceive in my search for truth, some part of the truth will come through. Thus, I need not necessarily know the reason behind the market's behavior in order to profit from it. That has been proven over the years. IM says, would you consider yourself a long-term trend trader? Oh yes, I put on a trade today that I may hold for up to 8 months, but then again, I may get out of it tomorrow. Tell me about your first major success in trading. Well, it's very difficult for me to remember all of them. Actually, in the early years, I was confused. I did not know it, but I was feeding my soul food that was required for it to grow, namely disappointment. I had no framework within which to understand the market and to take action in it. At that time, I lived on expectations, not possibilities. IM says, when did you begin to understand the markets? There was a long pause from Longstreet. Oh, sometime in the 1940s. Although I cannot pinpoint it, the thing that opened my eyes was that people make markets. The corn market does not move up because there is a short corn crop. It moves up because people think that the existence of a short corn crop will mean that prices should go up. So they buy. Nor does the bond market move due to a shift in the money supply. And it depends on what class of men is dominant in the market. You have to think not in terms of the market rallying because of a short crop, but the class of men which dominate the market and what will influence these men to buy, sell, or stand aside. Perhaps one class of men will be influenced by a crop report or news of money supply, while another class of men will look on the resulting hell breaking loose as an opportunity. All right, we'll stop there for now. Jump back into that tomorrow night. I don't have a whole lot on the markets here today. Today was like I said, we had flagged as a buy day because of the 2 period rate of change. We did we had done 3 days, 1, 2, 3 days down, even though the first day flip down was this day 7. Day 8, we still had continuation the upside, but then closed down. Then day 9 was the first close underneath the 5 SMA. That was yesterday. That set up today's buy day setups. We kind of, as you know, we kind of just chopped sideways all morning, then finally fell off after the FOMC news, only to have a nice rally into the close and held up by those earnings reports. Um, so tomorrow, like I said, I have that flagged as a buy day for tomorrow. Now, if we get back down under the 6408, 6408, we could see like somewhere down in here, we could see a flip down of this 2 period rate of change. So right now, I'll flag this down here so you can kind of see that a little better. Um, yeah, so this is today. We were here. Now this 2 period rate of change here move up. That's just with the Asia market right now. And let me flag this down here, 6408-ish. So we'll 756. So I'm gonna tag this as a possible red line here to keep my eye on that. If we move back down below that tomorrow, we could see this 2 period rate of change start to flip back down instead of stay strong and up. Um, Today was a wide range 7, so wide range of the last 7 days. Is what it's flagged on my system there. I didn't calculate this day here, but it says it's wide range 7. Um, if we didn't use up all of our bullets in this move here, then this flip up of the 2 period change should inspire a buy day tomorrow still. We're already seeing that continuation in the Asia session, as I mentioned. I want to pull over the 65,000 tick chart. Um, so this is what I was seeing on this. We have this A, B, C, D, E move down. So this, I think I had this in the charts here yesterday. We did this A, B, C. We were holding that bottom, kind of moved up here today in the morning session, only to have an E breakdown. So we have the A, B, C, D, E. I call this the ACE. The A, C, E, and usually on that, I will look for some kind of a 68% retracement right there, and that should be a goose the shit out of it trade, to the upside. I did not play. I did play one of the longs down here today, but did not capitalize on that like I probably should have. But not knowing if that was going to be the bottom of E here, or if we'd have a little bit further continuation down or not. But anyway, that's so we've now in the Asia session, we have taken out the tops of this D and the B, so we're above, take out the tops of B and D, moving back up towards these prior highs here before the start of this breakdown here in the 65,000 tick. So keep an eye on that. Also on the internals, this was very interesting today because I was watching this as that VIX was moving. I said, outside up, will there be continuation up for this week or rejection off the moving average? Well, here's the moving average I've got right here. You can see we actually exceeded above that on that hard push down. Then we rejected into the close, came back down, ended up closing below yesterday's highs and yesterday's close to move back down here. So keep an eye on this VIX. I've got 3 points up off of this low from 1470 up here to 1770. Otherwise, from the last high up here at 1948, we're below 1648. Anything staying below this 1648 could still be bullish as far as the VIX is concerned, and as far as that, just using this as a general guideline, the three point move in that. So, all right, that's all I have for tonight, guys. Tomorrow, being Thursday, trade safe. Let's have fun, and we'll follow up tomorrow. Thanks.